Stock market investments are considered as risky when comparing to other investment products. Here, the term risk in financial terms is described as the chance of returns or actual investment gains differ from an expected outcome. Risk includes getting lesser returns and sometimes the possibility of losing some or all of original capital. Like everything else in life, the higher the risk, the greater the reward. Unlike the other investment options, the stock market can be little bit risky, but the payoff will be much higher. One of the major reasons for this risk is market volatility. The stock market is very volatile and extremely unpredictable. This means that the shares you bought can come down or go up for any reasons that sometimes cannot be explained. Due to this unpredictability, the stock market is considered as risky investment product. However, if you study the market with great detail and invest enough time on market fluctuations, you can reap the rewards. The first step towards this is to understand the factors affecting stock market. What makes the stock market go up or down? Hi friends, myself Shiva from Alfinz. Our aim is to raise your financial awareness through the videos we make on behalf of Alfinz channel. Please subscribe to Alfinz YouTube channel and follow the Facebook page to achieve financial freedom. Why late? Let's begin the topic. Now we will see the factors affecting stock market one by one in brief. First factor is supply and demand. It is one of the most common factor affecting stock prices. When the demand of X company stock exceeds its supply, it effectively means that the number of buyers for X stock are more than the number of sellers, which leads to rise in price of the particular stock. In the same way, when the supply of X stock is more than the demand, it basically signifies the presence of more sellers than the buyers for X company stock, which leads to fall in the price of particular stock. Second factor, investor sentiment. Most of the investors take the sentiment of the market seriously when investing in the share market, either for the long term or for the short term. If investors are taking greater risk and investing aggressively, then the stock prices will go up. On the other hand, if the investors are more unresponsive, choosing safety over risk, then the stock prices will fall down. For example, in bullish market, the investors is much more confident while taking the risk and invest in much more aggressive manner. Then demand goes up, which leads to rise in the stock prices. In bearish market, the investors are more worried about risk and losing his or her investment or capital, and therefore demand goes down, which leads to fall in the stock prices. Next, interest rates. Another factor which affects the stock prices are interest rates. The RBI, Reserve Bank of India, decides the interest rates in India and also key monetary policy rates such as repo rates and reserve repo rates. They keep changing it at regular intervals to keep the inflation in check and stabilize the economy. Higher interest rates makes the loan expensive for the companies, resulting in lesser profits. This will reduce the stock prices. Lower interest rates makes the loans cheaper for the companies. Then automatically the price of the stock will rise. Next, politics. Stock market is mostly impacted by political climate of the country. Especially during the central elections, stock markets are considerably influenced. The political events and budget announcements create tremendous levels of volatility in the market, influencing the stock market deeply. A rise or fall depends on expectations of the voters from the government. If the government appears strong with the government public support, the stock price will rise. Similarly, the government appearing weak or if the public sentiment regarding the current government is not good, the price of the stocks will go down. Next factor, current events. The ongoing national and international events are one of the major factors influencing share prices, which include any political instability, civil war, riots or terrorist attacks. If the events are positive for the country economy and investor sentiment as a whole, then share prices will rise. Similarly, if the events are negative, then it results in fall of the share prices. Next, commonly affecting factor, that is company related factors. Any change in company aspects makes its prices volatile. Positive factors like increased sales revenue, fall in the cost of operations, production launch, repayment of debt, etc. increases future cash flow of the company. Hence, positive factors lead to rise in the stock prices. Whereas negative factors compose production failures, change in top management, high employee turnover, high manufacturing cost, fall in sales revenue, etc. badly impacts company productivity and future earnings. Hence, it results in fall of the stock prices of the company. The share prices change with the change in demand and supply of the particular company. It means if the company is fundamentally strong, demand increases, thereby share prices increases. In the same manner, if the company is fundamentally weak, then more number of sellers come into play and demand decreases. To explain you in simple words, the prices of vegetables that we eat fluctuate in change with season. I mean during summer, winter and rainy seasons, the prices are different. Anyway, you know the reason for such fluctuations in prices. As in the same way, the company's share price also fluctuate during company annual declarations, bonus issue, dividend issue, rights issue, share split, merging and demerging at the time of raising capital, and during change in management time, we can see fluctuations in the share prices. Next, natural disaster. Calamities like earthquake, massive rains and storms largely affect the prices of the shares for the company. This happens due to many reasons like destruction of the property and other assets. This causes company to incur heavy losses, which leads to falling of stock prices. Company sales are affected due to breakdown of manufacturing and transportation of goods. Therefore, the demand of their services and products depreciates due to natural disaster, which leads to fall of the stock prices. But in case of agricultural related companies, the shares are seen with good demand if the rainfall is up to normal or above normal for the year. Next, exchange rates. The relations between the Indian rupee and other foreign currency can also affect the stock market. This strong rupee means that our country is growing and this will lead to higher stock prices. When the price of Indian commodity rises, the exporters would have to suffer while the importers get goods at cheaper prices. Similarly, when the Indian rupee is weakened, the price of stock rises for the exporters and the prices lowers for the importers. Friends, I hope you are clear with the topic. If so, please like and share the video. Also subscribe to Alfinz YouTube channel and follow the Facebook page. Moreover, if you have any doubts about the stock market, please don't hesitate to post your query in the comment box. And also click the bell symbol next to each video to receive future uploaded video notifications. Open Demat account through the link given in the description below. We will guide you through account opening process and also provide you the complete support services as salesperson as long as your account is active. One small note, we don't encourage and we are also against to stock advisory tips, suggestions and recommendations by keeping Zerodha policy in mind. Friends, last one, if you want to clear your queries on stock market and mutual funds, you can also call me directly to my contact number displayed on screen below from morning 10 AM to 6 PM on working days. Thank you.